Zimbabwe cash crisis worse. About Venezuela once again.
Systemic important banks. They removed the 1,000 market called monetary independence. Hey there, hope all is well. Back at you today with some more RT News updates. And as you can tell from today's title, I'm going to bring to your attention a recent interview done by Alan Greenspan, in which he kind of gives a fair warning as to what investors should be looking out for. And it has to do with the idea that he believes that 2019 and beyond will be a year of stagflation, in which we'll see extreme inflation as well as deflation in a lot of other assets. But there's one particular thing that he mentioned that investors should look out for. And we're going to talk about that today briefly. But before I dive any further, as always,
Recession will be a recession.
We're going to hit a recession.
The date of the next recession.
A U.S.-only recession typically lasts 8 to 10 months.
A crash is coming. Now, whether it's 6 months from now, 12 months, 36 months, no one knows.
If you have the right plan to set up, you can make a lot of money from this.
So today I have just one article that just came out a couple hours ago, but yeah, I think it's very interesting how we have a former Fed chairman, someone who's been very influential in the development and the current state of our economy now, coming out publicly in an interview format, but also doing promotional work for a book that he's going to mention in this video here over my shoulder. But yeah, when Alan Greenspan speaks, it's well worth our energy to pay attention because he definitely knows what's going on behind the scenes. But in this article here, he shares some of his thoughts on how he doesn't really see a happy ending to all of this current volatility in the markets. So this video here over my shoulder is very interesting and well worth listening to, because at the very end, he makes a statement that definitely caught my attention when he refers to what investors should be on the lookout for. But yeah, briefly, I'll thumb through this. If you're interested, feel free to read more for yourself. But give you an idea what's going on here, it says the former Federal Reserve chairman, who famously warned more than 2 decades ago about the, quote, irrational exuberance in the stock market, doesn't see equity prices going up any higher than they are now. He's quoted saying, "It will be very surprising to see it sort of stabilize here and then take off," unquote. He added that the markets could still go up further, but warned investors that the correction will be painful. Quote, "At the end of that run for cover," which to me indicates the idea that as this market continues to go up, if it does, there will be a steep drop off in which a lot of people will come up short on that side of the equation. Scroll down a little bit more. It says on Monday, the S&P 500 closed the trading day at its lowest level since October 2017, while the Dow Jones Industrial Average plummeted more than 600 points at one point in the day. Quote, "The volatility is a function of how we speak, think, and feel, and it's variable," he said. "Unless you can somehow radically change human nature and how we respond, this is what you'll always get and have been getting. You have to count on it if you're going to understand how the market functions." So in the video above, he kind of highlights that idea that a lot of markets is due to human emotion. When people start to panic and fear is in the air, that also plays a major factor in confidence in these markets as more people consider the risk factored into investing, and then from that point make decisions that might not be favorable to the overall market. And scrolling down a little bit more, it talks about what Trump is doing here and how he made 2 tweets in one day in reference to what the Fed is currently doing and how he disagrees with the idea of them possibly hiking rates again. And then go down a little bit further. It says the former chairman was also alarmed that the United States may be poised for a period of stagflation, quote, "a toxic mix, when the economy suffers from high inflation and high unemployment. The last time the country experienced such an episode was in the late 1970s and early 1980s. And so definitely when I hear that toxic mix, definitely pay attention to that. Quote, "How long it lasts or how big it gets is too soon to tell," Greenspan said. He says, quote, "We'll know it when we get on top of it. And by waiting that long, it definitely will be very uncomfortable when the thing comes to an end." And so here's a fair warning from Alan Greenspan directly. I encourage you to listen to this video here. But more importantly, at the very end of this video, he referenced what he believes is going to be something that investors should pay special attention to. And he kind of left it up in the air because he can't directly say what it is. But yet we as viewers, we can definitely speculate on what it might be. But he mentioned that investors should be wary of toxic assets. And so that leads you to wonder, what exactly is he referring to? And the first thing that came to my mind was the whole idea of everything the banking sector has spun off to the public to invest in, i.e. mortgage-backed securities, as well as all the securitization of all those liabilities that the banks have come up with and turned them into investment instruments that the public purchase. but not sure exactly what he meant by toxic assets. But that lets me know that any digital paper instrument rolled out from this commercial, artificially induced economy we're in now probably qualifies as being somewhat of a toxic asset. But with that being the case, I would love to hear your thoughts. Leave a comment down below. Let me know what your thoughts are on this matter. And more importantly, share this information if you find it informative. Give it a thumbs up, and I'll see you later on. Enjoy your day.